Bald Guy Money would like to welcome all of our guests. Also, I sent out a video alerting you about the impending precious metals boom on May 4th, giving you 4 months to get ready. What I meant was that metal prices would start to rise once the Federal Reserve announces plans to decrease interest rates, which would be in line with seasonal price trends. This summer has been characterized by sideways consolidation and occasional pullbacks. In the nearly 4 months since I shared that video, the gold price has finally broken above important resistance levels. Not only that, it has done so for 3 consecutive days, which triggers the Morgan rule for those who watched my video with David Morgan a few months ago, which confirms a price breakout. What's even more significant is that gold has also set new weekly and monthly closing all-time highs, so this is definitely a major move for the precious metal. Not only that, but silver had a banner week as well, with prices hitting new monthly highs in euros and British pounds, and finally surpassing $40 per ounce in US dollars. When global investors and institutions begin to realize that gold and silver are not a bubble, and as those currencies near their end of 2011 highs, they aren't secluded. You could say they're the anti-bubble symbol. Additionally, these prices are not coincidental. Further price increases are imminent. Starting with the red flags that indicate the precious metals bull market has reached its next phase, I intend to do just that in this video. I will describe that stage and what I think will happen after it. After that, I have some bad news about the price of metals. They are much more expensive now than they were in the past, and they will be even more expensive in the next stage of the bull market, which is coming soon. I will also demonstrate the amount of gold and silver that I would aim to acquire at this time, prior to a surge in price. Finally, we'll wrap up this video by discussing the conclusion of the bull market and when it will occur. If you're trying to find a way out, this is crucial information for you. Because of how crucial it is to the video's overall message, make sure to watch until the very end. Now, before we get into it, I want to remind you to check out summitmetals.com and support them because they truly help make this stuff possible. Over the Labor Day weekend, they are now running a discount. Plus, I noticed that they offer fantastic deals on gold Krugerrands of varying years, which are coins that I collect in large quantities. So, have a look at that if you are interested in purchasing the breakout in gold. While you're there, enter the code NEWCUSTOMER at checkout to earn 5 ounces of spot silver if you're new to Summit Metals. Silver for less than $40 per ounce might be your final opportunity to get it at this price. Alright, let's dive in. Where exactly is the bull market for gold and silver at the moment? I warned you 4 months ago that large investors were making bets in foreign currencies because they thought the US dollar would keep falling in value. And it seems to make total sense at first glance. The dollar has lost approximately 12% of its value against the euro so far in 2025, and the Federal Reserve is widely anticipated to lower interest rates in September. This is despite the fact that core PCE inflation, their preferred inflation gauge, came in at 2.9% in the most recent reading, which is significantly lower than their 2% goal. Despite giving up on achieving an average of 2%, this goal is still theoretically in place. Having said that, the strategy's flaw is that no matter where you turn, things are nasty right now, and they're only going to get worse. This is particularly true for nations that issue trusted foreign currencies, such as the UK and France, which are nearly bankrupt. Money can be necessary for them, on behalf of the IMF, in order to prevent a default. The British pound and the euro are therefore rendered obsolete. With a national debt that is over twice the size of the country's economy, Japan is perilously close to bankruptcy. The yen has long served as a refuge for investors during periods when the US dollar has been weak. Because of this, major market participants and influential organizations are beginning to hedge their bets on fiat currencies. Thus, we have arrived at the point in the game where the major players, or whales, are beginning to stir and prepare their lifeboats, as the US dollar and fiat currency financial system will sustain significant damage even if it manages to avoid sinking. This may explain the recent investment by the Saudi Central Bank in the SLV silver ETF. This may also explain why the biggest dark pool buy of GLD ever made by a gold ETF occurred when an unnamed institutional investor likely someone who doesn't want anybody to know they're betting against fiat currencies, and on gold, executed the transaction. This is happening at the same time as Tavi Costa revealed fresh Bloomberg data on X last week, which reveals that central banks now have more gold in reserve than the United States does for the first time in over 30 years, state funds. For that reason, I maintain that nothing has happened by chance. For people who have watched the Large Short film, this is the part where it all comes together, where ordinary people had no idea what was going on, while the banks covertly sold their worthless mortgage investments. The event that central banks began preparing for in 2010, when they became net buyers of gold again, has finally arrived, and this time around, instead of dumping mortgages, they are dumping fiat currencies like the US dollar and others in favor of precious metals, and that is a big event that causes inflation, that is required to inflate the world's economy. They anticipated its return, but said nothing. Instead, they discreetly made preparations. As I've been predicting on the channel, this will lead to higher asset prices, including those for gold and silver, and eventually more inflation. Now that the large players or whales have positioned themselves, the next logical step in this bull market is for the average person to join in. A metals mania, possibly accompanied by inflationary fears, will cause lines to form at coin shops, but this time people will not be selling gold and silver, unlike what we've witnessed in the last year, particularly in the US. However, when people see the data displayed on the screen, they will realize how rare gold and silver are, and they will be willing to pay much higher amounts to purchase these precious metals. As you can see here, the amount of gold an average American household can save has decreased from nearly 7 ounces of gold in 1990 to about 1.1 ounces of gold today. This is due to inflation, which has contributed to higher asset prices and a widening wealth gap. I am glad that more regular people will realize that paper money is useless, and that gold and silver are real money. But the problem is that most will join when it is too late to afford the larger amounts of metals needed for adequate protection. I anticipate this trend will continue, so let's make some basic assumptions about the price of gold over the next 2 years to get a sense of how expensive it will get. For starters, there's the possibility that the US dollar price of gold surpasses its 2011 high by the same amount as the Canadian dollar price. And it's a piece of cake. I've already predicted that as the dollar falls in value, the global price of gold and silver will follow suit in US dollars. Therefore, the price of gold would rise to $4,839 per ounce. Now, another approach is to just assume that Rick Rule, who I've interviewed on the show a few times, is correct and that about half of the world's money is in gold. Then, instead of that percentage reaching 2%, as Rick Rule predicts it will, and where it has historically been as well, we'll assume a modest doubling to 1%, which would bring the price of gold to about $6,894 per ounce. What this means is that these are not hypothetical situations. Rather, they are extremely plausible possibilities. Considering the current gold price and the average US household income times the savings rate, it is clear that we are approaching a future where saving 1 ounce of gold per year will be challenging for the average person. In the more extreme scenario depicted on the screen, half an ounce of gold could represent 1 year of savings for the average American household. This emphasizes the continued wisdom of getting in early during this latest breakout and the wisdom of considering fractional gold pieces. I know some of you aren't fans, but hear me out. These numbers should make you think about these fractional gold pieces, because they have a good chance of becoming the most popular kind of gold, which are the most convenient to do business with going ahead. As you can see from the data presented on the screen, the situation remains unchanged when it comes to silver. In 1990, the average American household could save over 500 ounces of silver. However, based on the average price of silver in 2025, that number has dropped to about 100 ounces today. That figure falls to 89 ounces of silver when the current spot price is considered, which means that the average American household can afford even less silver now than when it was at its all-time high in 2011, when the price was higher. Similar to my gold price estimate of $60 per ounce in 2026, I have established some basic assumptions about the price of silver. First, I think it will reach a new high in Canadian dollars compared to its 2011 high, which would put its price at $57.73 per ounce. The second possibility is based on an even more basic premise. Even though I knew better, I foolishly thought silver could reach $100 per ounce. I was going to look at the stats and add them in here, even though I know it's less likely, at least in the short run, because I know a lot of you expect it. As you can see on the screen, the results show that a person will no longer be able to save around 100 ounces of silver per year, as has been the case so far in 2025, based on the average price of silver. Instead, it will drop to about 60 ounces, and possibly even lower if we actually witness that $100 per ounce price come sooner than I have predicted. Plus, we need to have an open mind about that prospect for the time being, especially because the US Geological Survey has just designated silver as an essential mineral. Having said that, I don't mean to scare you or give some of you stackers a false sense of security. In 2025, according to my previous recommendation, a Westerner living in a Western country should have at least 5 ounces of gold and 200 ounces of silver to cover 6 to 12 months of expenses, depending on your location and spending habits. Taking into account the affordability statistics I just shared with you, it is becoming increasingly difficult for individuals to achieve their basic aim of owning 5 ounces of gold and 22 ounces of silver. People who aren't prepared, particularly those nearing retirement age, need to take immediate action, which means setting aside money in gold and silver now, because the time it will take to save up that amount could soon exceed 10 years. The message I'm trying to convey to you in this video has nothing to do with dread or the end of the world, because it is supported by the data that I have provided. With that out of the way, let's get to the question that the viewer of this video came in with. And don't forget, in every video I do, I answer one question. Use the space below to ask your question. You might even see it in my next video if I decide to use it. Helen Brooks has this week's question, which is highly relevant to the video's subject matter. Hey Helen, I hope you're keeping an eye on this. Helen is inquiring about the potential duration of this bull market, and she also mentioned in her comment that she has faith in my analysis. I am grateful for her endorsement. Jumping right in, the precise start of the current precious metals bull market is up for debate. To settle this, we will examine the matter from 2 angles. First, I will present my preferred viewpoint, which holds that the current bull market began in 2001 after the dot-com bubble burst. You might be wondering how it all started in 2001 when there was such a significant decline from 2013 to 2015. So, to answer your question, yes, gold and silver may have been a little too optimistic during their 2011 bubble, but the world's central banks printed a ton of paper funny money to keep markets from spiraling out of control and the global financial system from collapsing. Since 2001, not much has changed. Actually, everything that was pushing up the price of gold and silver during that time is even more powerful now than it was before the global financial crisis. As I've demonstrated in previous videos, saving money in cash is pointless because bank interest rates don't even track inflation, far less than what was happening before. For this reason, and since it was widely expected at the time, central banks resorted to purchasing gold in 2010. Furthermore, dividend income from S&P 500 equities is still quite low and is getting close to all-time lows. Buying and holding precious metals is the only surefire approach to hedge your bets against the stock market's extreme volatility. The problem has only worsened since 2001, and it will continue to do so until our system undergoes a major shift, Helen. I am speaking to you and addressing your question. In that regard, I do not anticipate a resolution. Now, it doesn't rule out the possibility of a stop. After all, we witnessed a big bull market for gold beginning in 1971, when the gold standard was abandoned. However, there were pauses along the way, the most notable of which occurred in 1975 and 1976, the 5th and 6th years of the bull market, respectively, before it reached its peak in 1980. Without going into the details of what transpired here, which I can cover in another video if you're interested, What this tells me is that this bull market could pause in 2027 or 2028, when I might be looking to cash out my mining positions if it began in 2023, the year after the US seriously violated US dollar neutrality by seizing Russian assets, what I perceive as akin to the 1971 end of the gold standard moment, albeit its duration is limited. The current financial system will come to an end if the current events do not bring about the conclusion of the national pension and social security issue. I am saying this very seriously, so listen up. And that will hit us in 2033, if not sooner. This means that by 2030 or 2031, if the system lasts that long, I'm not one to believe in doomsday scenarios, the precious metals bull market will resume with only a small correction to prices much higher than today. So, don't wait for that pause to buy. I'm betting it will. Following that brief interlude, the following leg of the metals bull market is likely to dwarf all preceding rallies, including those of this year. So, Helen, I really appreciate your thoughtful inquiry, and I'd also like to thank everyone who has stuck around until the end of the video to hear my whole message. Do yourself a favor and hit that like button if you liked it. As a result, the algorithm is better able to suggest this video to others who could benefit from hearing it. What I'm trying to convey, and please don't be bashful about sharing this message with anyone you believe could benefit from hearing it. If you want to assist my channel in obtaining more views and subscribers, you should share this video with them. Thus, as I always close my films, I hope you have a great week and encourage you to take care of yourself and, more importantly, each other. In the next video, I will see all of you. Leave it.